So who is Sam Laxo? Sam Laxo. Okay, very very important. He is the author of this book, The Future of Gold from 2019 to 2039. He's a proud Finn, passionate about business development, markets, and gold. You guys can pause and read. Again, pause and read. Pause and read. So yeah, he wrote this thesis on gold, The Future of Gold 2019 to 2039. If we bring ourselves to, where is it? Somewhere over here. Give me a second. I'm gonna bring this up for us. And yeah, gold's been playing out ever since. We are in the final C wave, as per his comment. Let me just bring this up for us. It was on page. So this is 1998 up until 2015. So over here, there you go. So gold's potential ongoing secular bull market. Okay, this was posted in 2019, just over here. So where are we? Exhibit so ABC wave behavior between 1999 and 2011. But give me a second. I'm gonna go over this properly for all of you. So the final C wave into 6.4K. Yeah, 2020 sits over here, and the bull run began in 20. Where is it? Let me get my mouse. Just in 2020 onwards from here. So we are in that final C wave push, and the final C wave is going to be violent. That's what Sam said. Yeah. His comment was that cycles are driven by big picture fundamentals which are currently positive for gold. Yeah. And if we look over here, the larger B wave decline between 2011 and 2015 and is now in the C wave advance, which is the most aggressive advance in the ABC wave. So the final C wave, it's gonna be, pretty aggressive. So the strength of the C wave compared to the A wave can be explained by the nature of the advances. So if we were to break down the C wave in the same manner, so you've got A, B, C, D. Okay, leg one, pull back, leg two. So you've got drive one, pull back, drive two. We can look at the final C wave in the same manner by breaking down, for example, let me just bring this up here. So 1999. I think it's looking at the monthly time frame. Yeah, it's the monthly time frame. So from here, pretty much 1999. So you've got the wave A to the upside. Okay. Yeah, to the upside. 2011 over here. Pause, pull back, and then a continuation into the C wave. So we are in that C wave. Target is 6.4. So the C wave isn't complete yet. Okay, it isn't complete yet. 7K is the target rather than 6.4K. 7K is the target. But if you just look at how gold's continuing, yeah, aggressively. So one could say that gold finished a massive A wave, between timing A and timing B, and a massive B decline between 1980 and 1999, and is currently in an ongoing C wave. The C wave is usually more powerful than the A wave. That would put a target price of over 5.6 for gold before the C wave is finished. So we did achieve 5.6. Okay, according to the absolute T, 5.6K on gold. If you look over here, line the crosshair up, you can see the high. Yeah, look over here, higher. You see 5.602. So to the absolute T before the C wave is finished. So it may seem far-fetched at first sight, but now one could argue that gold may not continue pushing higher because we've achieved the 5.6. Where is it? We've achieved the $5.6, 5.6k dollars for gold before the C wave is finished. The C wave could be finished. Yeah, it could be. This could be the top, and now we may see a multi-year bearish trend, a multi-year bearish cycle to the downside. Okay, but we also need to take into consideration that any pullbacks, obviously, hedging will be the best approach here. But the way you guys are now following my path here is we're going based off inventory over here. I'm not gonna predict the fact that gold's gonna push above 485 and all of that stuff. I'm only gonna go based off what we have over here. So the current week's first low sits over, but the current quarter, its first low sits here, Monday 27th of July and Monday the 3rd of August. That's the first low. We need two breaches below that, which we haven't got as of yet. Okay, we have breach 1 to the upside, we have breach 2 to the upside. Okay, so if gold is actually in a multi-month bearish trend to the downside, then according to the concept that I have been showing you guys, where we need two breaches below the first low, then price will pull lower, which is another 6k points, pips, 6k pips. So just it's I'm not bullish, I'm not bearish. I'm just taking it as it comes in the market. To be honest, to be genuinely honest, that's how I approach the market. And also following this book as well. Also following this book. Yeah. So I wanted to just share this book with all of you. It's a good read. It's a very good read. It allows you to understand the potential ongoing push. Okay. If you line this up, we're in 2026. Okay, we're in 2026. Price can continue. Don't get me wrong, it can. Okay, there's nothing stopping gold from continuing. However, I do see the fact that if every single person is bullish on gold, yeah, again, somebody needs to be wrong. Yeah, a bunch of people need to be wrong in order for us to make money, or in order for anyone to make money. So with that being said, and let this be the weekly market outlook. So let's begin. Cool. Let's begin. So on the weekly time frame, we have this high remains protected right now. Okay. We've got Delta over here, Monday 27th of July. This is the excess candle. We need two breaches below the first low, which sits inside the quarter. So Q. So where is it? Where is it? So Jan, Feb, March, that's your Q1. April, May, June, that's your Q2. July, August, September, that's your quarter 3. Okay, so we are in quarter 3 right now. Quarter 1 sits here, quarter 2 sits here, and quarter 3 sits here. Okay, so we are inside quarter 3. The same concept that we are using on the 15-minute time frame. If previous sessions to the upside, the discovery is carried over to the next session, so on and so forth. So looking at the weekly time frame over here right now, Q1 prints the first low over here. Yeah, downside breaches here, 1, 2. We haven't seen an excess candle below breach 2, which tells me that we have a lot of downside potential because the excess candle is pending. Okay, which belongs to quarter 1. Quarter 1 did not print the first high, so we'll leave that as it is. Q2 prints the first high here, prints the micro breaches over here. Breach 1 to the upside, breach 2, excess candle. The first low is over here as well. First low prints, where is it? Breach 1 to the upside and breach 2 back below. That's the excess. So we're tracking all of this based in a via breach 1, breach 2, and the excess. That's pretty much it. Daily, I'm not so looking into it. The concept cannot be used on a daily time frame because there's not enough space over here. Okay, there's not enough space. We can only fit 5 candles per week. One, two, three, four, 5, and the new week commences. So we can't really use the sessions concept on the daily, but we can use it on the 4 hour on the weekly. We can use it on the 4 hourly. Yeah, you see, I've marked the highs and the lows. Week opening, delta candle marked out. Weekly, week's first high over here. 1, 2, flat bodies to the upside, downside breaches. 1, 2, excess, release. See, so I'm going based off the 4 hourly, and then I'm using the sessions on the 15-minute time frame to scope and pretty much capitalize on the inverses and continuations. And that's pretty much it. We have to take it as it comes. We don't want to be over optimistic, yeah, and try and project gold to some numbers that, figures that are not even going to make sense. Okay, so we're going to go based off 4 hourly. And yeah, this book was a solid read. A great book to read, to be honest with you. Great book to read. Yeah, have a look. I'll drop this book somewhere on the Discord handle, but have a look. And yeah, on the 15-minute time frame, there are many downside breaches pending. So let's do this. I might as well give it to all of you. So NY, okay, big, NY's first lows over here. You can see here, 1, 2, 14, 15, and 14.30. So 215, 230. NY's first low. Downside breaches are pending over here. Look, 1, 2. Yeah. So we're looking at 4472. If you look to the right, 4472.50. Downside breaches are pending below NY's first low. Cool. That's pending over there because we had a force raid. Look, London down, NY force raid because London's upside breaches were pending. So NY chased it. Yeah. When breaches are being left behind, they're gonna get chased. So yeah, downside breaches pending, and then over here Asia's first. So look at my prices. Okay, it's not gonna just magically drop off the roof, and if it does during market open, then that's the best price. That was the best price available at that given time. Okay, so we're looking at another 1,300 pip move to the downside into 469. We have to also consider the fact that, okay, cool, how are people gonna get fucked? Yeah, and that comes down to looking at, all right, cool, if sessions are leaving breaches behind and the force raids are happening, don't ignore them. Do not ignore them. Yeah, you may be catching longs, getting dip buys and then dip buys and dip buys, but don't forget that you can also capitalize on shorts into these levels where the downside breaches are pending. Okay, keep that in mind. Obviously, stay in that dip buy flow on gold, but when it comes down to sessions leaving breaches behind, yeah, keep an eye on them. Yeah, make a note of them. Just keep an eye on them because they are gonna get chased. So this low here is gonna get chased because downside breaches are pending. Asia's first high, Asia's first low is here, 230, 245, breach 1 to the downside, breach 2 is pending. But you know what's really interesting over here is the low here. This low has no downside breaches. This low here, Asia's first low, we have breach 1 and we have breach 2. That's fine. Mark has accepted it. But you see this, yeah, nothing has been printed over here. Yeah, you could argue that, yeah, the higher areas here, breach 1 to the downside and breach 2, but we know we need full body closures. Okay, apart from that, London is clean, so it's up to NY and Asia and the following sessions to now follow through and carry price into these levels. Take your time, don't rush. Okay, cool. I will check in on Monday onwards, and I am going to be in the charts from Monday onwards for at least 15 hours straight. So, well, not 15 hours straight, but I'll be up early and I'll be tracking every single session. We're looking at, so I'll be up 6:30, get gym out of the way, and then I'll be just waiting for London to print what it needs to print, and then monitor London, New York, up until 7 8. Yeah, and then I'll go gym again, sauna, close it. So by 9 I'll close the day. Sleep, wake up again in the morning. So I'll be running my day 15 hours straight. So I'm gonna leave that there for all of you. We'll check in later on, maybe Monday. Yeah, tomorrow. Tomorrow I'll check in, and then we'll catch up from there onwards.